Morning traders, welcome to the TMT Stock Market Strategy video for Monday, January 9th. Well, we had our non-farm payroll numbers here in the United States at 8:30 on Friday, and we basically were flat. Really not much of anything, but yet again, it's not what the numbers are, how the markets reacted, and the markets rallied on that news. So looking forward and looking for what's going to happen this week, we have a lot of earnings that are going to be coming out. Analysts have already dropped earnings estimates and moved them lower so that the companies can beat and obviously continue the grind higher in the stock market. Well, January, February are usually pretty decent months for volatility. So there's going to be a tremendous amount of opportunity, right? When you have an increase in volatility, that creates opportunity. We really haven't had much the latter part of the 2016, other than, of course, the Trump rally that occurred. Now, I forewarn everybody to be careful of this Trump rally and thinking that it's going to just continue. Remember, the market has rallied on what his promises are and what he's going to do, or at least anticipating on what he's going to do. So that's really nothing concrete. There's no real evidence, and I think that even when he gets in office, it's going to take a lot of time before he even implements any of his campaign promises and puts it to work. So just a word of caution. Does not mean go out there and just go out and sell the market, but you have to just use caution here in your trading more than ever in this 8-year bull market run, which I believe has matured. And for me to look to go and start adding to a portfolio here at these levels, it's just crazy. But nonetheless, just use caution, guys, and remember, based on your trading plan and your ability to manage your portfolio. So let's take a look at the dollar. We did have a dollar move much lower. That also helped the commodity sector. As you know, gold and silver, as well as crude oil, did move higher. And then we had, on Friday, we had a pop-up in the dollar based on that non-farm payroll number. So we're sitting right above here, above really good support areas. So we'll see. We really, in order for us to, you really have to even fill in this gap area of support and break below the 2560 to alleviate any upside pressure. And what I mean by that is, even if you draw a line here, just to show you, that area here would have to be broken, okay? And that would really take out that bullish symmetry of higher highs and higher lows, okay? So just to show you, that is what I'm looking for, and see if this market, if the dollar can resume its uptrend, if and when it were to take out these two key areas of support. And you can see here that I have in this dashed horizontal line, it came pretty close, within a few pennies, and then held, and then rallied back up again. So watch the dollar. Obviously, again, it does affect the multinationals as well. And when you are following the markets this week and going into earnings season, check out the multinationals. You want to be see what happens with that as well, because I think they're going to get affected. Their earnings will definitely be affected by currency headwinds. TLT. Looking at the TLT here, we did get a nice little move up. I mentioned that. I said, take out this little area here, and then look to go higher. Now, TLT actually sold off on Friday, and then now kind of recovered a lot of its losses. I think it was only down about 27 cents. So in order for us to move higher, I do believe, and I had mentioned before, that we're probably looking at some sort of a gap fill in this area, and then I think that would probably be it as a retracement rally, and then it would start to move lower again and continue its track lower, because I do believe, based on our charts and our technical view, that that we have an interest rate rising environment. And also, obviously, the Fed had mentioned it's going to raise rates 2 to 3 times in 2017. Okay, so bonds obviously will go the opposite way. Gold, a little different. Gold does not like an interest rate rising environment, that's for sure. However, gold does act as a safe haven trade. Same thing with the dollar. So if there is volatility that picks up and there is some fear that comes into the markets, gold will definitely benefit from that. I do think, and I pointed this out here, this little pattern is a bear flag. So I think it's just a retracement rally. That's all it is. I don't think at the moment I would be looking to buy gold GLD here. I'd wait for the next pullback and see if we make a higher low from this previous low. And if that does hold, then that's going to be your cue, and just to manage a trade and get long. And then once we break through our proprietary price channels, then I think we're probably headed right back up again. And I do like gold. I like gold for 2017. I like silver too. I like silver even better. SLV you can look at. GDX, the gold miners, you can see here, clearly leading the way. And now it's looking for a pullback. If we can back test this downtrend line here, and if we hold, then I think that, and we make a higher low from this low of this consolidation base, then I think that, again, we are on our way up to at least challenge some of these previous swing highs. Okay. Spiders, you can see here, spiders. Friday really was led by the Nasdaq. Nasdaq was strong, and it broke out and made new all-time highs. What else is new? Everyone keeps talking about it. And remember, guys, please don't listen to the pundits. Don't even listen to me. Make sure that you follow your trading plan and check on your own technical analysis. Make sure that whatever you're seeing here on the charts and in this video you would agree with. Okay, because there's a lot of talk, and it's just real dangerous when you start listening to CNBC, Bloomberg, and all of these people who deem to be they're experts. I would be very careful. Anyway, so spiders, we got here. We're looking at a move lower. We tagged that bearish rising wedge right to the penny, and you can see volume has been declining on this little 3 or 4 day pop up. So just again, like I said, use caution here. I'm not looking to scare anyone. Just to let you know, if I see something, and internally we have a market divergence internally. Breadth indicators are moving lower. They're not as strong as they were when we had our big move up. And then we're making new highs. If we're making new highs, the breadth indicator should follow suit to confirm that, and it's not. It's actually doing the opposite. So rolling over. Here's the IWM. You can see here we're just consolidating here now. This is still bullish. There's nothing wrong with it. But if we lose the 135, which as you can see we have that major thin zone, I do believe that we can probably get to that 126 area here, which would be the upper end of these two swing high points, if not right down to the 124. Okay, and that's IWM. And last is going to be the Qs, and you can see Qs broke out, made all new to highs on very little volume, below average volume. So that's something that's a concern. Checking out money flow charts again. I'm trying to keep the videos brief. Money continues to flow out. So that means any rallies that are happening in the indexes that I just showed you, money's coming out instead of going back into the market. So long as we have sector rotation going out of different sectors, that means the money as a whole is staying in. So that's what you want to look for. And again, I'm going to be pointing out some good sectors where I feel that we could probably look to trade. The one stock that I mentioned, or the index, was the IBB Biotech Index. Take a look at that. It's looking really well. I like to see the next pullback into a support area, and then let's see if we can see higher prices in the IBB. All right, guys, have a great day, and we'll see you tomorrow. Take care.